Imagine selling your house and being able to take your low rate of 3% with you onto your next home purchase. Keep that same new rate, but have a new address. Sounds like it's too good to be true. Well, maybe it is. The idea of portable mortgages has been floated around for quite some time now, but it sounds like the Federal Finance Housing Agency under the Trump administration is finally taking it more seriously. In this video today, I'm going to discuss what a portable mortgage is, how it could help you as a homeowner, and what the upsides and downsides may look for the housing market as a whole. My name is Brigid Schlegel. I am your Austin, Texas real estate agent. I specialize in relocation, new construction, and investment properties. And I'd love to work with you if you're thinking about moving out here to the Austin area. You can always book a call with me down in the description below. We'll do a private consultation to discuss what is the best strategy for your situation. My business is run entirely from referral base and people like you who have found me through my YouTube videos and social media. So don't be afraid to reach out. I'd love to hear from you. Even if you're just thinking about what it's like out here in Austin, Texas, I'd love to have a conversation and help you strategize. So portable mortgages, here is why it has been back in the headlines recently. During the COVID years of 2020, 2021, 2022, we had all-time low rates in the 2s, in the 3s, in the 4s, and this drove a lot of buyers into the housing market. A lot of people were able to lock in their long-term 30-year mortgage at a very low desirable rate. But now, since the rates have doubled or tripled where they were just a couple years ago, buyers today have a lot less buying power. They can afford less house, essentially, at today's current rates. This also means that there's a lot of homeowners who are going to hold on to those properties. They're not going to resell anytime soon, because if they were to resell and buy a new home, they'd be giving up that super low rate in order to acquire a higher rate, and that just doesn't make sense. If they have a reasonable monthly payment right now on a great house, why would they move and double or triple their monthly payment when they could just hold on to what they have? So in a sense, that lock-in of a low rate freezes a lot of inventory that could be out there on the market. Now, I know this may sound contradictory because in many videos I've talked about Austin being the #1 buyer's market due to having an overflow of inventory, which is still completely true. We have a ton of new construction and a lot more inventory and sellers, oftentimes builders, than we do have of the number of active buyers in today's market. However, the difference here is that although being able to bring your low rate with you would bring more sellers to the market because they would be able to sell their home but keep their rate, that also means that it's bringing those sellers as fresh buyers to the market. Now, unless they're moving out of Austin, which I hope you don't, I hope you stay here, but if you're able to buy, maybe upsize your house, downsize your house, pick the school zone that you'd rather be in, there will be more sellers, but those sellers will also be buyers who will be snapping up the other inventory that's out there. Now, I should clear the air. You may be confused between the difference of an assumable mortgage versus a portable mortgage. In an assumable mortgage, the new buyer takes on the existing mortgage, which is attached to that existing house. Whereas in a portable mortgage, the seller hangs onto that loan and that rate and just attaches it to the next home. Assumable mortgages do help buyers in today's market be able to pick up a resale property with a better rate. It does take more know-how in order to navigate that type of a transaction, and also sometimes the lenders still need to agree to making that mortgage an assumable one. And ultimately, it does help the buyers, but it does not help those sellers. So if the seller is not willing to buy a new home with a 6% or 7% mortgage rate right now, they're not going to even consider selling unless they really, really have to in today's market. This portable mortgage, on the other hand, is not going to be helpful to new buyers in today's market. It will be helpful to former buyers or current homeowners. Now, if portable mortgages become a reality, which quite honestly, I hope they do, it's not going to be just a easy switch the mortgage from one house to the next. I don't believe it's going to be as easy as it sounds. The way that lenders structure debt has a lot to do with both that individual's qualification, but also that particular house needs to meet their standards and pass certain requirements as well. This may cause essentially more work for the mortgage company to approve a new home and a transfer of that portable mortgage, with possibly less income for them and less desirability for the lender than if they were to get paid out on one loan and close a new one. Say, for example, if there's a price difference between the former house and the new house, and you're upsizing that property, so this new property is a lot more expensive. Maybe that former loan was at 80% of the full purchase price, whereas that former 80% is not going to cover 80% of the purchase price of that new home. So potentially that buyer is going to have to cover the additional equity, or there will have to be some restructuring or new debt taken out, such as a refinance. Essentially what I'm saying is it won't magically teleport the loan over. There will still be complications and hoops the buyer will have to go through in order to make sure that it works. Now, ultimately, I still hope this becomes a reality because I think this will benefit a lot of people. And I'm excited to kind of dig into that and learn, how I can help homeowners navigate moving their portable mortgage. But let's talk a little bit more about the risks. Now, the risks may not seem super obvious to the everyday homeowner, but the way that mortgages truly work is that they're often bundled into mortgage-backed securities, which are priced and modeled around those specific properties, right? When the loan jumps properties, there's additional locational risks, collateral risks, and all of this can impact how investors value those securities. In simpler ways, if there's more risks, lenders may charge higher fees, tighten the eligibility, or just overall limit who qualifies for those loans. So ultimately, there could be some charge to the portability of that mortgage that makes it less desirable as well. So in a world with portable mortgages, who is truly winning? I believe that it's going to be those existing homeowners who have been holding onto their property for a very long time, or have recently acquired a property with a lower rate and they'd like to move around within town, upsize, downsize, pick the right school zone without having the variability of an increase in their monthly payment, or maybe even avoiding the capital gains. Who's going to struggle with this? It's still going to be the first-time home buyers or anybody entering into home ownership at a higher rate in the first place. It may also increase the competition because if there's a small flood of homeowners selling and buying new inventory, there are going to be new buyers out there in the market competing with the same buyers that we have today who have a much lower buying power at a higher rate. My advice to you today, if you are buying in today's market, be aware that getting a better rate is still possible. You can do an assumable mortgage. You can go to a builder who have great incentives to help you buy down that rate, or you can ask me for lender referrals who will help you refi for free in the first couple years of your loan. In case rates do drop, you'll have that option in your back pocket to refinance and then lock in the better rate when the time is right. Ultimately, I do hope portable mortgages become a reality. I think it will unfreeze a big chunk of inventory that will also help bring more buyers back to the market as well. It's not going to fix affordability and it's going to come with strings attached, but it will help families have more mobility because in reality, people's lives are constantly changing even though the rates are not. So let me know in the comments down below if you could use a portable mortgage, would you? And what is your take? Do you think this is going to be a good or a bad thing overall for today's housing market? Again, my name is Brigid Schlegel. I'm your Austin, Texas real estate agent. Please don't forget to like and subscribe and book a call with me down below if you're thinking about relocating to the Austin area or want to move around within the city. I work with first-time home buyers, new construction, and oftentimes investors as well. Thanks so much. And don't forget, real estate is a fantastic tool to provide security and long-term wealth gains for you and your family. So if you love your family, you should be investing in real estate.